costs, a couple things just to keep in mind. Let's go back to now to our general rule here. Expense R&D costs as incurred unless there's an exception. We saw that there's an exception with the way that you account for computer software costs, and we'll go over that a little bit at the end. But there are two other exceptions that are very important to note. First, capitalize R&D costs that are related to assets with alternate future uses. That is the key word right there, alternate future use. So Amazon is developing a robot that can read barcodes. That they're just developing it. That would be normally you'd think as a development cost. But what if it has this other use that they're going to put wheels on it and turn it into a warehouse robot where it can scan barcodes and go get items off shelves and move it around a warehouse? Well, now suddenly you have an alternate future use for your development. And instead of expensing these costs, you're going to capitalize them. So that is a very key word. If you ever see the word alternate future use on the CPA exam related to research costs or development costs, it means that you capitalize. So capitalize costs related to assets with alternate future uses. And the second example, R&D costs taken on behalf of others, usually through a contractual agreement, are going to be capitalized also. So if McGraw-Hill comes up to me and they say, hey, CPA Magic, we want to make a feature onto Connect Accounting that is an interactive balance sheet. We want students to be able to click on line items, enter data, and have it update dynamically so that they can help them learn. I'll say, McGraw-Hill, that sounds like an awesome idea. If you pay me $1 million, I'll do it for you. We shake on it. I go on my computer, I start coding. Normally, I'm developing this software for them. So normally I would be expensing this. But think about it. The reason why you expense R&D costs is because of the uncertainty of future economic benefits that will come from it. But I have a contractual agreement here with McGraw-Hill to buy the software that I'm developing for them. So in this case, there is no uncertainty of the future economic benefit. I can just capitalize these costs immediately. Essentially, what I'm doing is just creating inventory. So I have an agreement from McGraw-Hill that they're going to buy this for me for $1 million. All the costs that I spend developing it are just going to go into my inventory and eventually be expensed as cost of goods sold. They're not going to be expensed as R&D costs. So the key word there is behalf of others. And normally you'll see the words contractual agreement tied to that as well. If you're doing R&D, if you're undertaking R&D on the behalf of others, it's essentially inventory, so it gets expensed through cost of goods sold and capitalized as inventory. Now McGraw-Hill is going to expense R&D as normal. They're going to be expensing R&D. They hired me to do it for them, but they're still expensing the R&D. I'm the one capitalizing it. So those two exceptions are very key. That and computer software, those are the main exceptions you're going to see to R&D expense. That's what's going to be on the exam. One other thing to note, IFRS, all right? IFRS, our old friend, expense research costs is incurred. That sounds like US GAAP. That's exactly the same. But it does have this exception. You can normally expense development costs, but you can capitalize your development costs as an intangible if it meets a 6-factor test. And we always talk about GAAP being a rules-based approach to accounting and IFRS being more of a principles-based approach to accounting. Well, this is kind of a good example of that. US GAAP has this one exception for computer software. IFRS has no classification of computer software. It just says, in general, you can capitalize any development costs if it meets these following factors. And it sounds kind of like what we're talking about with computer software and GAAP. So if technological feasibility has been established, if the entity can reliably measure the expenditure, if it has the intention, the ability, and the resources to complete the development, and it's pretty certain it'll generate future economic benefits, well, then you can capitalize any development costs. Do you really need to know those factors? Probably not. But you gotta, I mean, it's the CPA exam, so they could throw anything at you. So just be conscious of that. Under IFRS, you can capitalize any development costs as an intangible if they meet the 6 factors. There is no separate classification for computer software like there is under US GAAP. So let's look at some questions now. Hopefully hammer this into our head a little bit better. 2006 retired CPA question. Which of the following is a research and development cost? A, development or improvement of techniques and processes. Well, that sounds like the definition of a development cost, so that's clearly the answer. But let's take a look at the other choices just so we know what we're talking about. Offshore oil exploration, that is the primary activity of a company. Now, oil exploration cost, if a company is exploring for oil and they find some, then it's going to be capitalized. The exploration costs are going to be capitalized as part of that natural resource. If they don't find any, it's just going to be expensed as an operating cost because it's the primary activity of the company. So that's not going to be classified as research and development. C, R&D performed under contract for others. Remember, that's the example I just mentioned about me developing a balance sheet for McGraw-Hill. That's under contract for others. It's essentially inventory expense through cost of goods sold, so that's not R&D. And then our favorite example, market research related to a major product, marketing expense, not research and development. So the answer there is going to be A. Let's look at another retired question from 2006. Standard Company spent $10 million on its new software package that's to be used only for internal use. So that's the example of internal use, not to be sold for licensing. The amount spent is for costs after the application development stage. So there we go. There's a term that means essentially technological feasibility, application development stage. So the amount spent is for costs after application development. So they're going to be capitalized. So that $10 million spent is capitalized. Economic life of the product expected to be 3 years. All right. Remember, internal use software always amortized using the straight line method over its economic life. So I think I already even have enough to answer this question. Let's look at the next line. The equipment on which the package is to be used is being depreciated over 5 years. I don't care about that. It doesn't matter on the equipment in which the package is to be used. So I don't care about the computer. I'm talking about the intangible of the capitalized software costs here. So that's just in there to distract you. And then what amount of expense should Standard report in its income statement? So I have a capitalized cost of $10 million, always amortized straight line with internal use software. So I'm going to amortize that over 3, and it's going to be C. It's going to be 333, 3333 as our amortization expense. All right, let's look at a 2010 question now. Let's skip to the last line so I know what they're asking for. What amount should Beta report as research and development expense on its income statement for the current year? So I'm looking for what amount is research and development expense. So during the current year, they incurred the following costs. Let's take a look at them. 1, salaries of laboratory employees researching how to build the new car. Well, remember I said anything really related to researching new information, that's going to be part of research expense. So salaries, that's all encompassing. The salaries are part of it, and you're researching new information here about how to build the car. So this is a valid R&D expense. That's part of R&D. Let's take a look at the next one. Legal fees for the patent application for the new car. Legal fees related to patents are going to be capitalized. That's part of a different lecture on intangible assets. But remember that legal fees about patents are going to be capitalized. So that's not R&D expense. Then we have an engineering follow-up during the early stages of commercial production. Well, the key word there is engineering. That has to do with some mechanical issue that's not going to be R&D on an intangible. So that's not research and development expense. Then our favorite one, marketing research. Not research and development, never. Marketing research, man, they love that. Just don't get fooled by that. Not R&D expense. And then design, testing, and construction of a prototype. That is our definition of R&D expense right there. So that's R&D. So that's going to be a total cost of $650,000 that gets expensed. B is your answer. And finally, let's end it with a CPA magic question. Spica Corporation reported capitalized software costs of $900,000 on its December 31, 2011 balance sheet. Software expected to have a 6-year economic life. Sales 20% of the expected total sales of the software in 2012. On December 31, 2012, software had a net realizable value of $650,000. What amount should Spica report as the net capitalized cost of computer software on its December 31, 2012 balance sheet? All right, so capitalized software costs are $900,000. Remember that you amortize with the greater of straight line or percentage of revenue. So 6-year economic life, 900,000 divided by 6, 150,000. You would, if straight line amortization, 150,000. Sales for 2012, 20% of the expected total sales revenue of the software. So 20% times 900,000 is going to be 180,000. So amortization under the gross percentage of revenues method is 180,000. That is greater than 150,000. So you would amortize using percentage of revenues. But look at this next line here. On December 31, 2012, the software had a net realizable value of 650,000. Remember that net capitalized computer software costs are reported on the balance sheet at the lower of cost or net realizable value. So I would amortize it 180,000 using the greater, which was percentage of total revenues. So now it's at 720,000. But I would actually then have to add an impairment loss because the net realizable value is less than the cost. And you do that with reported capitalized software costs. So what amount should I report as the net capitalized cost of computer software on my balance sheet? I should report 650,000. A would be the answer to this question. My amortization expense would be 180,000, and I'd have a $70,000 impairment loss. So that is R&D costs in a nutshell. It's a little tricky, but if you just watch out for those couple tricks and just keep this stuff in your mind, it shouldn't be too bad for you.